Welcome, everyone. Thank you for joining us today. We're going to get started in just a moment, but in this pre-time while we're letting everyone join in, I'd love to hear where you're joining us from. If you're coming into this session with a burning question, you can go ahead and drop it in the chat. So I am coming to you from Loveland, Colorado today, an East Coast transplant. My name is Courtney Pollock, and I am the Customer Marketing Coordinator for SWK Technologies, and I'd like to welcome you to today's session, 2025 Tax Changes, Tariffs, and Trade, How to Stay Ahead and Compliant with Avalara. So today's session is presented by our great partners at Avalara. Connor O'Donnell will be on in just a moment, and we're going to dive right in today to all the changes, tariffs, all the trade impacts that you need to be aware of halfway through the year. I see someone's coming from Boulder, Colorado, so very, very close to me. So excited to have someone else in the mountain time zone. Love to hear if we've got some East Coast people, some West Coast people. And then I've got just a couple of logistics I want to go over. Don't want to bore you, but just a few things to know. Obviously, you've been placed on mute. That's not because we don't want to hear from you. It's just to keep background noise to a minimum and keep things more simple. So we'd love to hear from you at any time. You can chat in the chat, send reactions, whatever it may be. If you have a question, you can put that in the Q&A section, or you can put it in the chat. I'll try to find it either way, and we'll get all those questions answered at the end. And then we're also going to send out the recording of the session tomorrow, whether you were able to attend, not attend. So if something comes up and you have to jump early, we will send you that recording, but we encourage you to stay for the whole time, get your questions in at the end. And if you're watching this recording later, like I said, it'll come right to your inbox tomorrow afternoon. So we're thrilled that you've taken some time out of your busy day. We hope this webinar is going to be super informative and help you fulfill your vision of a smarter and easier way to run your business. We're going to go over a lot of industry insights and tax changes and things like that. We'll also tell you a little bit about what Avalara does. So, take in all the information, ask the questions, and we'll have a poll at the end if you want to get a little bit more information, connect with Connor, whatever it may be. So that is enough for me. I'm going to bring Connor on stage, and we're going to dive right into the main event. Hey, Connor.
Hi, Courtney. Thank you so much for having me today, and then thank you all for attending today's webinar. So first things first, just some logistics. We are, of course, the experts when it comes to all things compliance, but today's webinar is for educational purposes, not necessarily tax advice or advisement purposes. So just want to start with that little disclaimer here. A little bit about myself. I am from Raleigh, North Carolina, originally from Winston-Salem, so I've been a North Carolina person my entire life. Been here with Avalara for 5 years now. That entire duration, I've been partnered with SWK, so got to work with all the folks in SWK. So been a really good pleasure working with them. And specifically at Avalara, I work within our Acumatica ecosystem. So I'm working with customers who are in that eco in some capacity, either currently on Acumatica, transitioning over to Acumatica, or once in a blue moon, just folks who are considering Acumatica. So I'm looking forward to spending some time with y'all today. So what are we going to spend in our time today together? We've got a lot to cover. I just spent the last week on vacation with my family from Connecticut, so my typically slower pace North Carolina accent is going to be replaced with a little bit of a quicker Northeast accent, which lends itself well to today's webinar because we've got a whole host of topics to cover. So we're going to dive right into it, get going. If you'll have questions, put them in the chat. I can see it on the side, so as we're chatting, happy to address those at the tail end of the conversation today. So let's get into the meat potatoes first. Let's talk about some tax trends. We're here at the midway point of 2025. So let's go into some tax trends that we've seen in the first 6 months of 2025. So I know that SWK has a variety of different clients and a lot of different industries, but a good portion of SWK's client base is in the manufacturing industry. So we're going to start there with some of the tax changes. And just high level, it's very important for folks whose businesses are within that industry to stay abreast of different legislative changes and really just different tax changes because we're seeing a very big influx of changes, specifically about how the states are defining what falls under the classification of manufacturing. And we're seeing two big examples of that change and really how things are moving in such quick cadence. The first one is tax exemptions. How states are defining what is an exempt product, what is an exempt service, how tax exempt certificates are managed. That is becoming for a top priority for businesses within the manufacturing industry specific to compliance. And then additionally, we're seeing a lot of states are adopting retail delivery fees. So we're seeing with those two changes, the big need for businesses to stay up to date on some of the changes. And the biggest reason why staying up to date on these changes is important is because we're seeing a big intensification of audits nowadays. And specifically, we're seeing that auditors for manufacturing specific companies are paying a lot more attention to their exemption certificates, specifically what their process is, what their exemption certificates on file. So we're going to dive a little bit more in depth into audits a little later in today's webinar, but just want to kind of put that plug in there that we are seeing a an increase in the level of um, intense probing for audits for our customers in that manufacturing industry, which is a new update for us. But just some changes I want to bring your attention to specifically on this slide today. The one that really stood out to me is that the manufacturing industry right now is valued at just below $300 billion, and it's expected to go all the way up to $1.2 trillion in about 8 years from now in 2033. So huge change, huge growth in this industry and other changes too that I found interesting. So 14 states right now are considering exempting TPP, which is tangible personal property. And then 10 states are now offering exemption certificates for taxable property. So we're seeing a lot of differences, and there's not really much of a rhyme or reason that these changes are happening. And so that lends itself into our next slide, which is a little bit more state specific. So it's not industry specific to manufacturing, but just a few updates. The interesting part about these updates is that it's really showcasing that the states are experimenting with new ways to generate revenue in the form of new taxations. So some examples are the grocery tax, swipe fee limitations. There's temporary taxes on lodging. These changes are not ones that necessarily have been in the works for a long time. They're very sudden and a little bit more retroactive. So that's why a system like Avalara is beneficial to businesses like yourselves, because we are able to stay abreast of these changes in real time and then make these changes in real time too, ensuring that you and your business are staying compliant no matter how much the states that you work within change and update and modify their different taxation. So I talked about audits a little bit earlier, and I think this is a really interesting slide because just kind of going through the color coded, the states that are in orange are states that are projected to have a more financially challenging landscape in the next couple years. And so we're forecasting that as these states are getting into a little bit more of the, we'll say the red, they will start increasing the level of audits that they're doing, the number of audits that they're doing, the penalties that they're levying during an audit. So if you are working in any of these states that are in that orange, just know that at Avalara, we are forecasting how these states are doing on a macro level, because on a micro level, we're seeing that our customers will have more increased audits with higher penalties in those states as the state governments work to refill their coffers in a more financially challenging landscape that they're dealing with. All right, so we did tax changes. We're going to move to the other T. We're all about alliteration today. We're moving to tariffs. So let's hop right into it. So we're going to start when it comes to tariffs. Let's start first with HS codes. A lot of folks that I speak with on a day-to-day basis who are dealing with international compliance assume that these HS codes are universal. But unfortunately, it's not the case. So if you're seeing here on this slide, the first 6 digits of every HS code are universal. But beyond that, every state is different. You can see some of the specific ones here. Australia, of course, it starts with 6405.90, but then it ends with 0001. US ends with 9067. Japan ends with 0.119. So there's always these different variations in HS codes that you as a business have to correctly classify, or it'll lead to issues at the border when your goods and services are being either brought into the US or exported out of the US. And then the hot topic when it does come to tariffs, there are big differences in the duty tariffs. So in Australia, it's 5%. US right now, it's 12.5%. Japan, it's 30%. And those are all for the same exact product. So if you're shipping to these different locations with the same exact product, you're going to have these difference in duty tariffs that you have to manually account for if you're not utilizing a third party like Avalara. And these variations can really cause a lot of headache if you're not classifying them correctly. And we're going to get into what some of those headaches are and how Avalara can solve out for them. So if you were to misclassify your HS codes, there's a few different things that can kind of happen in a domino effect. Um, Ultimately, they do lead to bigger business problems. So let's start first with abandoned carts. If a customer, if they're checking out on your website and they don't see a full landed cost, it's very common that customers will get cold feet and leave mid checkout. I'm sure some of you all have had that experience. I've had that experience. I'm a big Premier League fan, so I buy a lot of jerseys from London. So when I don't see the taxation, it does give me a little bit of heebie-jeebies of what is this tax going to be for this. So that is definitely something that other customers are feeling at a larger scale as they buy products in that international landscape. One that I hear pretty commonly from my customers in the international space is products being stuck in customs. So if you're using a specific US based HS code for international shipment, it might not be valid for the destination in hand. So that creates delays, it creates confusion, and ultimately that trickles down to your customers not having their orders fulfilled, being frustrated, and potentially losing that business. And of course, if you go all the way to the right side of the deck here, the buyer experience being a negative one is something that we really want to make sure that we're avoiding, because if surprise duties come up, or there's a no-show at delivery, customer might not come back, or worse, financially for businesses like yourself, they might reject the shipment altogether. And so where Avalara comes into play all this, it's not all doom and gloom. Avalara helps eliminate these issues by making HS codes accurate, localized from the start. So you can ship anywhere within the world and know that your goods and services are going to have the correct HS codes, negating any of these four different negative issues that might happen as you're dealing with international customers. So how do we do that, right? There's a lot to solve there, but we've got a really tight integrated solution to help out with that. And this is where we would just ultimately really shine because we connect all the pieces of that global tax puzzle. Um, so we help with everything from returns and filings. We can help out with custom duties and VAT taxation. Speaking of HS codes, we can actually do the HS code classifications for you. So rather than you having to be on the hook for getting those correct classifications, that's something that Avalara and our team can do. And then also we can do the VAT registrations through IOSS, specifically for that. As you're expanding your footprint into these different markets on the international scale, you do need to get registered in them, no different than what you have to do with state registrations here in the US. So Avalara can help out with that aspect as well. So don't really worry about juggling multiple different tools or gaps in compliance. At the end of the day, this is just summarizing that when it comes to international compliance, our integration between the products are seamless. Our offerings are able to give you that full scale compliance automation when it comes to international compliance. And then if you're looking for a little bit more detail here, we did go kind of a step deeper into how Avalara helps out. So some of the things that we've already mentioned, just giving you the exact titles for those products, because if you do want to learn more about them, we can provide information. I'm happy to have a conversation with you, but also just having the access to them online too to get you different information. So we've got Avalara Cross Border that helps estimate the different duties and taxes at checkout to make sure that you and your customers are getting those accurate rates during the checkout process. We've got the tariff code classification, like I already mentioned. It's an AI tool that essentially goes through all of your different customers and they review and assign different HS codes based off each country. So, like everyone else, we are also using AI to make processes a lot more efficient. And that's really just been the name of Avalara's game for 2 decades: automation, leaning into technology to prevent the need from any type of manual oversight and allowing you all to do the revenue generating priorities that are also on your plate right now. Alrighty. So, with that in mind, so those are the tax changes, those are the tariff overviews. Um, as we go a little bit more broad, I just want to talk to you about some big pillars when it does come to compliance back domestically within the United States. So we're going to start off with Nexus because that lends itself to audits, which we'll talk a little bit more about, and then talks about the correct registration process to make sure that we're getting you compliant in the states that you're doing business within. So high level, Nexus is simply just the connection point between you as a business and the state that you're doing business within. It used to be pretty simple, used to just be based off brick and mortar, where you had personnel located. Now it's based off a whole variety of new factors, such as economic nexus, so the amount that you're selling into a state, marketplace affiliate nexus, so are you utilizing a third party like Amazon or Walmart or eBay, in addition to different types of nexus, like marketing type of nexus through affiliate nexus. So there's a lot of new trigger points for nexus that businesses are tripping up on and accidentally triggering, needing their business to get registered in the state in question. And so, just working a lot with customers in the Acumatica ecosystem who are dealing with a lot of exempt sales. Maybe they're a manufacturer, maybe they're a distributor. A lot of times, when I talk with folks in that first meeting, they say, "Hey, Connor, listen. Um, this is great. Nexus is important. We want to stay compliant and sleep easy at night. But at the end of the day, most of our sales are exempt. So we're selling resale. So there's not a lot of taxable revenue that we're generating. Therefore, we should be good to go on Nexus." I always feel bad being the bearer of bad news, but the right information is always the good information. So this slide shows that most states take into account exempt sales. So your total sales amount when it comes to Nexus thresholds. So any state that you see here that's in orange is a state that counts gross sales, so taxable sales in addition to exempt sales when it comes to Nexus thresholds. So there's only a handful of states you see here in blue: Florida, for example, Arkansas, Oklahoma, Missouri. Those states just take into account taxable sales, but a lion's share of the states do take into account gross sales. So if you're thinking, all right, I might have triggered Nexus, there might be more out there that we need to get registered within. No fear. This is again where Avalara helps out. So we have our risk assessment, also known as our Nexus study. And in the next slide, we have a free link to our risk assessment that you all will get as being part of attendees for this webinar. Um, but really, what this risk assessment does is it'll go through your data. So, specifically, the inputs that you're putting into the assessment, where you're selling into, where you have employees. Do you have sales folks attending trade shows or traveling for sales meeting? Just a lot of specific information to understand what is your compliance, really just more your makeup across the country of where you are or are not working within. And then we'll give you specific examples of which states you have achieved Nexus in, how much previous liability you have in those states, and then we'll ultimately give you the results of how Avalara recommends you get registered in that state. So I'm going to spend a little bit of time on the next slide, just so you have time to get that QR code. So the risk assessment that you see linked here, it will provide you a free risk assessment that'll go through all of those different data points that I just mentioned in the last slide. And it's a $4,500 value that you'll get for free for attending today's session. I also like to say I'm always a little cautious of the word free. Um, this is truly free, right? There's no catch where you have to buy Avalara's products or anything like that. You can get the risk assessment results, and if you can apply them, you can apply some of them, you can apply none of them. Ultimately, the goal here is just to give you more education and more information about where your business has triggered Nexus. What you do with that information is ultimately going to be a business decision. So um, I'll give it like 5 more seconds here if you want to get that QR code. Also, at the end of this, you can reach out to me too if you weren't able to snap that QR code, and I'll be happy to provide you that free risk assessment. Alrighty, let's go into audit triggers, because like I mentioned in that previous earlier in the webinar, we are seeing a higher increase in the number of audits that are taking place. And this really dovetails well into the Nexus conversation because Nexus is the main trigger that we see for an audit taking place for a business. uh, a business accidentally doing work in a state and not realizing that they exceeded the threshold. Number one trigger of why folks ultimately get audited, and then will come to Avalara and say, hey, we need to get a compliance solution in play. The other very common one that I hear anecdotally from my customers, it's the third kind of bullet point. It's when your customers get audited and then your business name comes into play, and then kind of like a little domino, they finish up their audit with your customer, move right on to you. So those are the two main ones that I hear from our customers about why they received an audit. But some best practices when it does come to an audit, for this one specifically, the big thing that I hear during audit is just the demand for information specifically around exemption certificates. The first thing that a lot of auditors will do when they're working with a business like a manufacturer or distributor who's mainly exempt is, hey, that's great. You weren't charging tax. Let me see the exemption certificates that you have. So that's why it's really important to have a strong compliance process and have this documented, have updated certificates on file, know where you're selling into, know what those state thresholds are, and we're able to help you out in getting all of that in different reports within our Avalara dashboard for those customers who are utilizing our services. But at the end of the day, there are these things that you see here of the kind of do's and don'ts and tips and tricks. At the end of the day, an audit is all based off the auditor you get. And I'm sure some of you on this call have had audits that have been pleasant and relatively painless. And then I'm sure you've had some where the auditor, like all of us, might have been having a bad day, and was a little bit more aggressive in the amount of information, the quality of the information that he or she was asking for. So the experience of the audit is based on that auditor's discretion, ultimately their comfort level too, of granting extensions, looking at sample exemption certificates versus just looking at your entire repository of exemption certificates. So there is that different variance in the experience of an audit, but ultimately our goal at Avalara is to make it as easy as possible for you. So as we go into the different common areas of non-compliance, so it goes without saying, but I'll say it anyways, your areas of non-compliance are where auditors will dig in first. Um, of course, we talked about Nexus, but the one that I hear a lot is taxability of products and services of being an area of non-compliance unbeknownst to my customers. Quick kind of side story. So about 3 years ago, I was working with a customer who was registered in Texas, and they were providing like sand, like pallets of sand or bags of sands. And they read a tax citation in Texas that they thought that based off their determination of reading that tax law and tax citation in Texas that sand was a taxable entity in Texas. So they were collecting and then remitting sales tax on all of their sales for their sand pallets, and then remitting that to the state of Texas. They ultimately remitted about $60,000 worth of taxes to Texas. And then one of their customers called them up and said, "Hey, this is a non taxable service." Or product. So they went back, they utilized Avalara services. We did deem that there was a small caveat that sand is considered taxable, but it's considered non-taxable if it goes through a refinery machine, which it did in this situation. And it's this tiny, tiny, tiny little clause in this big long tax citation. So of course they didn't see it, right? And so when I was working with them about 2023, they were still fighting with Texas in order to collect back that $60,000 that they had accidentally remitted to Texas. So that is a very common situation that I hear from my customers of just not knowing how their goods and services are taxed. And that's where Avalara comes into play. We become your sole source of truth when it comes to taxation and making these tax determinations. The other area as well, of course, is exemption certificates. I feel like we spent a good amount of time talking about this, but the only other things that I will say is that every state has a different expiration cadence. So I'm in North Carolina, like I mentioned. Exemption certificates in North Carolina stay good indefinitely. Um, if you're in Illinois, I was kind of looking over the side and I saw someone had a Chicago burbs that they're located in. Illinois exemption certificates, they expire every 3 years. Um, Florida resale certificates expire every year. So just know that your exemption certificates have different cadences for expiration, if at all. So rather than you keeping up with that, our exemption certificate management system can keep up with that and automatically request a new certificate from your customers when these certificates are about to expire. Again, the end goal for partnering with Avalara is automating compliance tasks that you don't need to be spending time on. We can utilize our technology to do it so you can focus on other revenue generating activities. Alrighty. So we'll talk about the voluntary disclosure program. Wanted to end here because with our VDA process, which is short for voluntary disclosure agreement, that is a very common scenario that comes about from taking the risk assessment with Avalara. Sometimes you might just have a simple state registration in that state, but sometimes you might have previous liability that is quite high, and that liability or back taxes are pretty significant to the point where we need to go through an amnesty program. So that's exactly what a voluntary disclosure agreement or VDA is, where Avalara will serve as your intermediary between you and the state that you're getting registered in. Nice part about working with us through a VDA is typically penalties are waived, um, whereas normally there's not many penalties that are waived. But we also can limit the look back period to about 3 to 4 years. A lot of times, if you're getting registered in a state and they kind of get wind or kind of get the scent that, okay, maybe this company's been working with us for a while and they should have been collecting taxes, it's at their discretion to look back as long and as previously as they'd like to, whereas we limit that look back period. The big thing I'll note with VDAs, the key is that you have to initiate it first before you register in a state. So if California calls you up and says, "Hey, looks like you needed to be registered in California last year," you can't then complete the VDA process. So you lose the ability to kind of have the parameters that the VDA provides if the state contacts you first. So that's why we always say take the risk assessment first, know where your liability is, if any, and then from there we can create a game plan that fits your business best. Because some people choose to get registered in any state that they have liability. Some folks are more comfortable with the risk. Ultimately, it is not Avalara's. We don't have a preference what you do. We are just going to align with what you want to do when it comes to getting registered in different states and performing VDAs like this. Alrighty, y'all. And so we've got the consequences of non-compliance here that we'll wrap up with. I went through and I just put this kind of like star next to the ones that I've heard most in my 5 years. Uh, so the first one is, of course, getting audited, right? And then the taxes and the penalties and the interest that comes about um, from those audits. But if you go to the bottom left of the slide, this is a very common one that I see, at least in the Acumatica ecosystem, where a business that is reaching out to me, they might potentially be going through either an IPO or an acquisition, to where they want to make sure that their books and their compliance is tight and it's accurate and it's succinct, because all of that can really have a big impact on the success of an IPO, the success of an acquisition. So that's where I hear I'd say about 20%, maybe 30% of my customers are going through some form of a reorg. That's the catalyst for why they're reaching out to Avalara to get their compliance fine-tuned through our products. And then the bottom right one is just accountability. So making sure that you as a controller, a CFO, an accounting manager, when you're presenting your compliance to the higher ups, you can say, hey, this is correct. This is accurate, because Avalara is 100% accuracy guaranteed. They're taking care of our tariffs. They're taking care of our Nexus exposure and liability. If we're going through an audit, Avalara is able to combine and give limited provincial views for our exemption certificates just in the state of North Carolina, where we're getting the audit from. So we're able to really be that one-stop shop for you when it comes to compliance, specifically compliance automation. So where I'm going to leave y'all with today, we talked why Avalara, but I like to end on this slide because it really fine tunes exactly what we can help out with through the different pillars. So the top one, the orange one, are our core products. And this is probably, if you've heard of Avalara or interacted with myself or someone else on the Avalara team, you're probably pretty familiar with these top four products. So our exemption certificate management system, our tax engine, AvaTax, our returns platform, aptly named Avalara Returns, or what we've talked about a good bit today, our international compliance solutions. But when I say one-stop shop, it's not because of those four products. It's also because of all of the products that bubble down beneath it. So if we go to our supporting products, we're able to help out with different registrations and licenses. We talked a good bit about that today. But we can also help out with making sure that you've got that correct research when it comes to your product taxability. So the situation with the sand and the refinery machines and the different taxations for that one little nuance, that can be solved through Avalara Tax Research. And that company that I'd worked with in 2023, they ended up buying Avalara Tax Research for that exact reason. Um, we can do item classification for HS codes, cross-border we already talked about. If you're dealing with 1099 or W-9s, we can help out with that, in addition to property tax being a new solution that we're helping out with as well. We've got over 1,200 different integrations. Of course, I work specifically with Acumatica, but we service all ERPs. We service all different types of e-commerce platforms. And if you go to the bottom, that the services listed in gray, those are our different services that we can help out with. We, of course, talked about our sales tax risk assessment, which it looks like, just doing a quick little chat, looking at the audience chat here, that folks are getting that link. But we can also help out with implementing Avalara services. So if you're thinking, bandwidth's a little bit tight, Avalara sounds great, but where am I going to dedicate the resources to implement the software? We can do that in a fully outsourced solution, in addition to providing you training and support when you are up and live as an Avalara customer, or in the process of becoming up and live with Avalara. Well, y'all, that's all I've got for you on the predetermined side. So appreciate your time going through all this. I know it was a lot. We went international, we came back domestically, talked tax trends, talked tariffs. So want to turn it back over to Courtney if there's any Q&As that came over on the chat while I was chatting.
Yes, so we do have some questions from the audience, and we'd love to take even more. We've got some time. So if you're out there, now's the time. Get your questions in. We'll do our best to answer them live, or if not, follow up with you offline. And then also for everyone that's stuck around with us this whole time, Connor dove into a lot of good information today, but obviously there are 50 states and a lot of tax changes. So we are going to drop right now on your screen, you'll see a link and you can get the full mid-year report from Avalara. So that report, if I'm correct, I think is like close to 100 pages, maybe 100 pages, and dives deep into every specific scenario you could need to know with tax changes this year. So a great resource. I'll also drop it in the chat in just a moment as we dive into Q&A, but that report will give you more than information, I think, than you could even want. So thanks for diving into as much as you could live, Connor. Let's get into those questions. And, I'm going to start with one question that I think will be on most people's mind before we keep going is how does pricing work for the different Avalara solutions? I know you guys have a lot of different solutions. So if you could just give it, whichever one you can answer to.
Yeah, so most of our products are usage based. So it's based off the how much you're utilizing us in the states that you're registered in. That's why the risk assessment is so important to take on the front end, because your quote could change for Avalara software services based off the number of states that you're registered in or need to get registered in. So it's a usage based model. I can walk you through the different types of steps and data points needed for providing that proposal.
Perfect. Thank you. And then someone in the audience who is a Avalara customer said they receive Avalara certificate requests from vendors. As an Avalara customer, can they link these requests with their account so they don't have to re-upload them each time they get one of those requests?
Yep. So I saw that come in from Sarah. So if you did mean your vendor certificates, so the certificate that your business is sending out to your vendors, um, just want to make sure she said it. Yeah. In that situation, there is a separate module for exemption certificate management system. There's one for customers, and then there's one for vendors. You can utilize our vendor module to do exactly that. But if you are asking like, hey, can I link this to my customer's profile within Acumatica? If you are utilizing Acumatica, that is a service that we can do as well, where we can link the exemption certificate to the customer's profile within your ERP via our pre-built integration between our exemption certificate management system and Acumatica if you are utilizing Acumatica.
Perfect. And I don't know if you saw, Sarah said that that is what she
Yep.
meant. So perfect. And, totally slipped my mind as I was making sure that we got you guys all the link to that full report. But we are launching just a quick poll. I know we've covered a lot today. We've shared a lot of links, but we're curious to know out there in the audience if, you've discovered a lot about Avalara today, what your ideal next step might be. So if you missed that, QR code or that link to that risk assessment, let us know and we'll send that over to you and get you connected. Or, we've gone through a lot of different solutions today. If you'd like to see a personalized demo of one of the Avalara solutions, multiple solutions, and see how they work specifically for your business, your tech setup, how it will connect with your ERP, we'd love to get that time set up with you and Connor so that you guys can go through, your specific scenario and ask all the questions you have. If you just want some additional resources, want us to resend the links, et cetera, lots of options there. I'd appreciate it if you'd respond to the poll. It always makes me feel good that there's other people here with us on this session. And we're going to go through just a couple more questions before we end for the day. So, we've talked a lot about that Nexus, economic nexus and how to get that free assessment. But Connor, can you tell me a bit more about how someone figures out how many states they have Nexus in?
Yep. So because every state has a different threshold, so some states it's $100,000 in sales, some states it's 250,000, some states it's 500,000. Coupling the complexity to that, some states take into account transaction count. So 200 transactions into a certain state is a good rule of thumb. Some states it's an either or situation. Some states it's an and situation. So that's where the risk assessment helps out. We take all of that when we have all of those rules and rhythms and thresholds on the back end. So as you're completing the risk assessment, putting in your different data points. So how much did you sell into Michigan? How much did you sell into Florida? Was it taxable? Was it exempt? When you put in those different data points, our tax advisory team then takes your results and then we cross reference it based off those thresholds. And that's how we're able to give you a very clear, concise table that lists out all the states that you need to get registered in, how much liability you have accrued in those states in a 1 year look back. And then from there, what is our registration recommendations, whether it be a simple state registration for low liability states or a voluntary disclosure agreement, VDA for short, for your higher liability states. So all that's answered in the free risk assessment that you'll have linked as part of this webinar.
Okay, perfect. Thank you so much, Connor. And I think that's all of our questions. If I missed your question, now's the final moment. Pop it in that chat. There's a lot going on. With that, we just want to say thank you. Again, the poll is still open, so you've got a couple of seconds. We'll send out the recording tomorrow afternoon and also link all the resources that we talked about here today. So if you want to grab that free risk assessment, huge value there. If you want to check out the full 100-page report on all the tax changes, dive specifically into your state, your location. If you want to connect with Connor, you can reply to that email. You can always reach us at info@swktech.com. We'll be happy to connect you with Connor and her team. Avalara are great partners with SWK and have a lot of different automation solutions to really make your life easier. And we love to work with them. So thank you, Connor, for giving us some time today, giving us all these great resources to share. We hope you found it and everyone found this informative. If you have any questions at all, reach out to your SWK rep or reach us at info@swktech.com, and we're happy to connect you with Connor and the team at Avalara. So thank you all and have a wonderful rest of your day.
Bye, everyone.
Bye all.